I would not blame you if you were a little hesitant to put on a trade in oil after the past few months ago when we had a weird event happen in oil. But if you're interested in oil, today's cherry bomb involves Exxon Mobile, which has 4 stars of liquidity according to Tastyworks, and a moderate positive correlation to the SPY. And if you see on screen here, there's a 78% probability that Exxon Mobile will stay at or above this red line, which is our break-even line here. And there's an even better P50 of 84% of us collecting 50% of the credit on this trade. So if you're interested in following the trend of the past 3 cherry bomb trades and putting on another short put, so some undefined risk, then stay tuned. We're going to build out that trade. Hi everybody, Neil here with Option Theory. Thanks so much for joining us, and I do apologize for missing this week's recap for the portfolio. So I'm not going to do too much of that. Sorry, I want to keep these videos brief. I want you guys to get this content digested and move on with your day and get trading, right? So we can see quickly that we have made some good progress to getting ourselves back to breaking even after some bad ones, but do note, see this portfolio here. When you take off all your profits, sometimes you're left with a portfolio of losers. So with that, let's take a look at building out. Oh, I didn't welcome everybody. I did a little bit, but anyway, I'm all over the place today. See, you take a few days off. All right. So if you're new here, head on down to that description below. You can sign up. There's a link to sign up for the Tasty Trade Cherry Bomb email blast. We get those trades. And this is a great place for us to test out our theories, whether it's, how you're going to do your technical analysis or just trading in general. You might be new. And here we do this inside of ThinkOrSwim's paper money simulated trading platform. So you can do all the learning with none of the risk, of course, none of the profits as well too. But do that, join us, and a lot of this content is time sensitive because, hey, we're dealing with options here, right? So you want to hit that subscribe button and ring that bell so you get notified as soon as these videos come out. All right, there we go. We did that. Now let's build out that trade. So head over to the Analyze tab, go to Add Simulated Trade, and in the options chain, you want to be in the September 11th weeklies, which as of today, which is August 4th, you have 38 days to expiration. I have all the strikes open here. Then you scroll down to where you see the 39 strike, which is a 90 bid and a $1.10 ask. So if you left click on that bid, you'll end up selling one of these, or depending on your settings, you might be selling 10 of these puts. So make sure that it is the contract size that you want. We do one lots here, right? Trading small and trading often. With 39 is the strike, and we're going to set that to a mid price of $1. So with that, we can head over to the risk profile. Now that we've built out the trade, we go to the risk profile. That's not the risk profile. This is the risk profile. Make sure your calendar is set to the expiration, which is September 11th or 12th, depending on how you look at that. There's not much of a difference, I promise. Here, I'll show it to you. Watch the big change. Boop. There you go. Not much of a change, right? So if you then click on these 3 dots and lines, this actions menu, go to set slices, set it to break even. There we are. This is our break even at expiration. So we use the turquoise line for break even. This is I'll call it the today line, right? We can see that we're looking at a 73, or we can round up to 74% probability according to ThinkOrSwim. Tastyworks gives you a different metric, but that's okay. They're really close. All right. With that, we can see what our maximum profit is $100. We're going to seek to take that off when it gets to 50, which would be right about here, right? If Exxon Mobile today jumps up to $44, in the share price, then we're looking to take this off. All right. So what's our max loss, though? Of course, would be the entire share price, right? So we always go into the trade knowing what we can make and what we could lose. What our profit target is, what our exit target is, right? Our exit target would be 3 times this credit received. So if we've hit a $300 loss, it's time to cut your loss. All right, let's right click this trade. Let's choose confirm and send. We can see here that our $100 is our maximum profit. The maximum loss is the strike price, which is $39. minus the credit we received of $1, which is $38, times 100, your standard multiplier. Of course, we're looking at a maximum loss of $3,800 should Exxon Mobil go out of business in the next 38 days. All right, I'm going to hit send. That's going to put this over in my working orders. And just taking a quick look at the day right here, using this custom watch list here, we can see that it looks like gold is continuing to make its run up. Oil's going to go down a little bit, so that could mean that we see a little pain if we get filled, or we might not get filled. We might, or we could get given a better price for this one, price discovery, right? All right, so we're looking relatively down on some of these index, small amounts, right? Natural gas, silver's up, so yeah. This is going to be an interesting day. We'll see what happens. Over here on the eastern seaboard of the United States, we have a tropical storm moving up here. So if you're in that area, stay safe. And yeah, if you've made it this far, thank you so much for your views, for your subs. If you've already subbed, I appreciate all of you. I try to respond to all of your comments. So if you ever have questions, if you ever just want to say hi, I'll be there for you. All right, everybody. You know what? Happy trading.